I really hope that you sold all your Dogecoins and reinvested back all your gains into stock market, of course after paying all the taxes. Anyways, let's talk stocks. Hello everyone, Alex is here. I hope you're doing well. I hope you're staying safe. Today we're going to be talking about stocks that I've added to my watch list just recently because they caught my eye. They're high potential, high dividend, high growth, non-regular company stocks. I'm really considering adding them to my portfolio already, but for now I'm just having them on my watch list, and I think these are the companies that you might be interested in as well, so add them to your watch list. With the whole world getting stabilized and getting to a sort of normal state, we would see a lot of companies are bumping back to their pre-market crash levels or even beyond that as soon as mid this year or end of this year. And right now I think there are a couple companies that you might be interested in looking at where the recovery might play a pretty huge role in their performance. And my watch list right now keeps growing and growing every single day because of that. And if you have a stock in mind that you think is a high potential and is a really good company to invest to right now or in the nearest future, let me know in the comments and we can chat about it. And also just a reminder that the stocks we're going to be looking at today are good for long-term investment portfolios, not for day trading. So keep that in mind. And these are the stocks that you want to hold for at least 1 year, as that is my approach personally, and I'm here just sharing my experiences and trying to help everyone else as much as possible. Alright, enough talking, let's see what I have in my watch list today and what I think are pretty good companies that you might want to add to your watch list as well. And the first one is AltaGas. The ticker symbol is ALA.TO. So AltaGas actually is a pretty good Canadian stock that gives investors exposure to value, dividend, and pretty good pandemic recovery trends. Over the last 5 years, AltaGas was actually behind its midstream and utility peers. However, over the last 2 years, the company started to clean up their balance sheets, they started to de-risk their portfolio by diversifying better, and they also started to focus more on their cash flows. Today, the company operates a very stable natural gas utility in the US, and they also integrated midstream export business in Canada. This company came out super strong with the crazy results after their first quarter of 2021. The company's earnings are up 35% year over year. Normalized earnings per share are up 63% year over year. And the company's earnings in midstream business are up a phenomenal 153% year over year. And overall, their earnings report was fantastic. No one expected that. And this will support their future dividend growth and future market appreciation. Well, that's my thoughts. We'll see what's going to happen. And now let's sum all that up in our metrics. The company's market cap is around $6.7 billion, so it's a decent company, solid size, so we should be good on that front. The current dividend yield for AltaGas is around 4.17%, and their 5-year average dividend yield is actually at 7.3%, which is way more with what they have right now, and that might mean that the share price of this stock is a little overpriced, but I think the company right now has that momentum where this just started to grow really fast, and I think this will cause the dividend increases in the nearest future as well. Their current payout ratio is around 76%, so it's a pretty stable number, they're pretty good in it, and I think they still have that room to increase their dividends and start paying even more. Their 10-year share price appreciation is actually at 0, so they didn't grow anything if you invested in them 10 years ago, but I think the company just started growing recently as of year or 2 years ago, and that's what we need to look at. And they're up around 35% of their share price in the last couple of years. And that's also including the stock market crash of last year that dipped their stock down by 70%. They already recovered from that and they're actually on the move to go beyond that. The drip amount for them right now is around $7,200. So it's a pretty good number, and I think it's gonna be lower soon enough once they start increasing their dividend payouts. The beta parameter is at 1.64, so it has some share price volatility over the short term, but again, we're looking for a year or 2 or 5 years investment portfolio here, so we shouldn't worry about that. So you see why I added this company to my watch list, because I think it has pretty good potential going forward, and right now probably one of the best times to keep an eye on it, because I think they're showing a very good improvement quarter to quarter based on their earnings reports. So I'm definitely going to be eyeing this company for the next little while, and I'm probably going to be adding them to my portfolio soon enough, and I'll definitely let you know if I end up investing into them. Let me know in comments what you think about AltaGas and if you think it's a good investment right now or not. Let's move to the next one, which is Keyera Corp. The ticker symbol is KEY.TO. So Keyera stock is actually a very known company. You probably heard about it, and if not, I'm going to tell you about it. And apparently right now is one of the best dividend stocks you can add to your portfolio or to my portfolio, but I'm still just watching it. This company actually has a very similar sustainability as Enbridge, which is one of my favorite stocks, because 70% of their cash flow comes from the fee for service or take or pay contracts, which are very sustainable, and we can rely on their dividend increases long term, and also that the company is going to be paying those dividends consistently. And also, like Enbridge, Keyera actually continues to improve their dividends year over year. Currently, the company offers a very good dividend yield of 6.8%, which is crazy if you think about it. And their dividend yield grew by 7.8% yearly over the last 12 years. And only that tells me it's a great dividend stock to be added to my portfolio and get these dividends back. During the last year market crash, the stock plummeted by 70%, which is crazy. But what actually happened after that is also pretty good as well, that they started to recover pretty fast, and they almost right now got to the point to their pre-market crash levels, but not yet. So you still have that opportunity to get in before their turnaround back to their pre-market crash levels. So that's my thought as well, that there's still a discount on this stock to get into. That's why I have it on top of my watch list, that I'm probably gonna start investing in them soon enough. How can I skip this 6.8% dividend yield? This is crazy. And as we started to exit the pandemic, well, I really hope we started, the oil demand started to grow as well, which is going to drive the Keyera's cash flow even higher. What also caught my eye for Keyera is one of their projects which is under construction right now. It's a 1.6 billion pipeline system, KEPS, which they plan to finish in the next 3 years. That tells me there's a really good long-term opportunity for this company. So if you want to invest for at least 3 to 4 to 5 years, I think this might be a great opportunity for you and for me. With their pretty good dividend history, say you invested $10,000 12 years ago, today with all the dividends reinvestments and share price appreciation, your portfolio would be worth around $40,000. So it's a 4x return in 12 years. I think it's pretty good. And I think they're going to keep doing this going forward based on what I see for this stock. Let's take a look what we have for our metrics for Keyera Corp. The market cap is around $6.3 billion, is actually at the same level as the AltaGas we just talked about. Their current dividend yield is around 6.6%, and their 5-year average dividend yield is actually at 5.7%, which probably tells us that the share price right now is undervalued, which also tells us that probably it's a good buying opportunity right now. And it is actually, because they haven't still came back from their market crash of last year. So they still have this 20-25% room to recover to come back to the pre-market crash levels. Keyera is also a part of the Dividend Aristocrat list, as they increase their dividends consistently for the last 10 years, which is pretty good, and we can expect them doing it going forward as well. One red flag I saw for Keyera is their payout ratio, which is at 680% right now, which I think is not very sustainable number, and they're burning through their cash to pay out these dividends, and this risks actual dividend payments in the future unless they can recover from this and put their payout ratio to the normal levels. And I think with all the economic recoveries and with all the demand for oil that's coming back to its pre-pandemic levels, I think they have a pretty good chance to get there. The 10-year share price appreciation for them is actually at 47%, which is pretty good if you think about long term, and it's also including the last year market crash where they plummeted by 70%, so I think it's not a very good signal to look at if you want to invest long term. The other thing that I noticed in their earnings reports for last year is that they keep missing their earnings per share, which is probably understandable because of this market crash and all that happened and oil demand just plummeted and all that, but still something you want to take a look at before you're going to do your investments. And their DRIP number is actually pretty good, is at $5,500, and actually consider this on the lower end specifically for Keyera because they pay dividends on a monthly basis, and it means that with our DRIP setup we're going to be getting a free share every single month with our dividends reinvested, which gives us 12 free shares per year, which I think is pretty good and it's a decent dividend reinvestment strategy that you can take, and I can take as well. Their beta parameter is a 2.5, which makes this stock a pretty volatile in terms of their share price for short-term investments. So keep that in mind. In my opinion, these two stocks are actually very hot right now. They have a really good potential. They're paying a lot of dividends back, and they also represent a pretty good long-term investments. So I'm probably going to be adding them very, very soon to my portfolio, but I still want to watch them for a little bit. They're especially good for dividend investors like myself, or for those investors who are seeking to improve, to grow their passive income. And that's all the stocks I'm adding to my watch list right now. There are definitely a lot more stocks to watch, and there are a lot more stocks that are worth investing into. So let me know in the comments what are your best right now, what you're eyeing on, and if you think these two we talked about today are also something you're watching today. With all that, thank you for watching. Don't forget to smash that like button and subscribe button. Hit the bell to get notified, and I'll see you around. Cheers. Thank you. Bye.